Hello, everyone. I'm going to give it a few minutes for everybody to join. Excuse my voice. I still don't have much of a voice from having COVID and an upper respiratory infection. So hopefully my voice will last through this entire live. I've got my water, so hopefully. So if you are watching, please put in the comments where you're watching from, how many short-term rentals you have, if this is your first one, if you're about to file your tax returns for your first property, if you have quite a few, if you've been screwed over before because somebody didn't know how to calculate your rental income. Put it all in the comments. Would love to hear or see where you're coming from. New Jersey just purchased in Clearwater, Florida in December. Nice. Who all is filing an extension in hopes for 100% depreciation? I know a lot of people are. So this will be great for you because that means you haven't already filed your Schedule E for 2024. And I'll be able to show you exactly how to do that with your CPA. I'm going to preface that I am not a CPA. However, I work with highly specialized CPAs in the short-term rental industry. They know the exact same thing as I do with Schedule E versus Schedule C. I have shown them how we calculate it on our end. Today is going to be the first time ever that you're going to see a live comparison between a Schedule C and a Schedule E for your rental income and how much it can make you and how much it can actually break you and not be able to qualify you at all. I've always said, don't do it on a Schedule C. I'm going to show you today actually why. If you've seen a presentation I've done before on how to calculate your rental income, the first part of this is going to be the same, so it's going to be a review for you. But the second half of this presentation is going to be that comparison between a Schedule C and a Schedule E, and it's going to be life-changing for some of you. For long-term rentals, Frederick, Adam from Houston looking to purchase in Galveston, here in central, what is that? Massachusetts. Another purchase in Myrtle Beach from Franklin, just bought in the first in the Smokies. Awesome. Glad to see you all here. So I'm going to add my slides to the stage if you guys can see that. I'm going to see if this is better for you guys to see full screen. I think it is. Okay. So how to calculate your rental income. First part we are going to go over. I've got to have your undivided attention for this. This is going to make or break your next deal. It's going to either triple your income or show a really big loss for you. This is very important for you guys. Yes, this is going to be replayed. You can replay it as much as you want after the recording or the live version is done. It'll be recorded in the history of ever on YouTube, and we'll post those replay links for you. All right. The common issues I have heard. I can't get an investment property because my debt to income ratio is already too high with the current housing payment I have. The credit union told me my rental income was negative and then I couldn't qualify for another purchase. You're going to find that's very common with banks. Completely normal for banks because they don't calculate rental income like they should. I tried to get financing at the local bank, but they said my debt to income ratio was too high. Spoiler alert, obviously it was not. Okay, I'm going to take my face away so you guys can see this fully. Here's an example that what I'm showing you right now is our debt to income ratio calculator. This isn't the rental income calculator that I'm sending you guys today. If you want the DTI calculator, we can send that to you as well. This is just showing you what their debt to income ratio would look like trying to buy another property. So here's an example of someone whose debt to income ratio is already pretty high and they will not qualify off of their debt to income ratio alone. So they make about $6,250 a month up here at the Top left, if you keep going down, you can see some debts. They already have a total mortgage payment of $2,317, some credit card, auto loans. Now, if you look at the right-hand side, you will see what I've highlighted. Their current debt-to-income ratio is 45.4%. If you do not know the max DTI for conventional loans, it's 50%. So they're almost already there, right? They got a little less than 5% to go. If I even tried to put in a new proposed housing payment for their new purchase, their debt to income would shoot up to 93.4%. They wouldn't qualify. I'm going to show you three things today. I'm going to show you how you can use proposed rental income to help you get your next property. I'm going to show you how to triple your current rental income. And I'm going to show you actual solid differences from a tax return. I'm not making up numbers, you'll see it. Between what could be on a Schedule E for your income versus what would be on a Schedule C. So as it stands right now, future debt to income ratio, 93.4%, would not qualify. However, you are allowed to use proposed rental income from the property you are purchasing. Let's now look at this example with that. This is based off of a $300,000 purchase price. So we put all the same debt, if you see here in the top left, all the same debt is there. We've now put in projected rental income just to cover that mortgage payment. Look what happened to that debt to income ratio. It's the same, 45.4%. Their future is now what? 45.4%. That's because we are offsetting their proposed monthly mortgage payment with proposed monthly rental income. So now that borrower just went from 93.4% debt to income ratio, where the banks will tell them they do not qualify, to now being able to qualify for their first short-term rental. Now let's look at issue 2. I see some questions in the chat. I will highlight all questions at the end. If you're just now joining me for this one for your first time, I do a Q&A at the end. So I will go over all questions that are in the chat. If you want to hold your questions until the end, you can. If you feel like you're going to forget your question, go ahead and put it in the chat, and I will get to it at the end during our Q&A session. Now, issue 2, the credit union told me my rental income was negative and that I couldn't qualify for another purchase. This is what you're going to hear 95% of the time, I would guess. And 78% of the time, they're incorrect. Are you ready to be amazed? This is my corny part. I'm going to show you a little magic trick, and then it's universal across the board. I'm going directly off of Fannie Mae and Freddie Mac guidelines. This is nothing that should be new, but I'm showing you as the general public, right? How it should be calculated. You're going to get the calculator where you can do it just like us, the professionals. Loan originators haven't shown you this before because either A, they don't want you to know it for some reason, or B, they don't know it themselves, how to calculate themselves. We know that you can increase your monthly income by owning short-term rental properties, right? That's why we're all here. We know that you can claim expenses on your tax return to lessen what you owe the IRS because it lowers your income for that property on the tax return. That is why many of you are holding off on filing your tax return in hopes of that 100% bonus depreciation. What if you could also magically more than triple? I'm not talking about meeting. I'm not talking about doubling. I'm not talking about any of that. I'm talking about tripling your net rental income on your next loan application. Would you believe me? This is what I mean by this. Whatever your tax return shows, what if you could claim all those expenses with the IRS and have your cake and eat it too, but triple your rental income on your next application? Would you believe me? Go ahead and put in the chat if you would believe me or not. I know I'm going to have some no's. Thank you so much for that support. But I'm going to show you just how it's done. You've probably heard of this STR tax loophole where you claim the depreciation, you offset your income, you're still having that asset, all that fun stuff. But have you heard of the super duper STR tax loophole? No, because I just made it up. let's take this example. Client makes $44,000 per month. They purchased this property for $1.2 million. Now, before you come at me and be like, oh, well, of course he's going to qualify. He makes $44,000 a month, Britta. No, no, no. This person has been in the short-term rental business with me before short-term rentals were cool, before you guys even knew who I was. So he's been building up his portfolio for a while. So his monthly income right here is $44,000. You see that I've highlighted other monthly income as nothing right here, right? Just keep that in mind as we go along. Total mortgage payments, $20,043. So yes, he makes $44,000 a month, but he's got almost half of that in mortgages from his real estate investment portfolio. And then I put like a little debt, whatever the other credit card debt is. His current debt to income ratio is 49.1%. As I went over in the first slide, debt to income ratio wise, he wouldn't qualify a loan off of this. This is where about 30% of banks will stop and say he doesn't qualify. The other percentage of banks are going to calculate his rental income like this. What if we add the net income? So let's look at the client's rental income. What you're seeing on this screen, if this is your first time before you file your tax return, you are seeing rental income and expenses on the Schedule E for this particular property. The client's monthly mortgage payment is $6,719 for this property. Okay. So in the slide before, I showed $20,000 in mortgages. $6,719 of that is this one property. This is how the banks will calculate your rental income. Many of them. They're going to take gross rents on your Schedule C. I've highlighted it for you so you don't have to know what you're looking at. His $212,954. Okay. And then they are going to subtract total expenses of $169,132. They are going to get a net income of $43,822. That would say per month he's making $3,651 in income. Now that doesn't even cover his mortgage payment, right? His mortgage payments, again, $6,719. So if you look, that $20,000 did change to about $16,391 because they're taking off about $3,651 from that mortgage payment. Still with me? Okay. So I still highlighted that other income line, still nothing there. We've taken off a little bit of his debt. So now his current debt to income is 40.8. We can probably qualify him for a $300,000 purchase price. $2,000 monthly mortgage payment. That's not using rental income. Yeah, that's basically it. Okay. A rule that many lenders do not know or do. According to Fannie Mae and Freddie Mac, you are allowed to add back things like taxes, insurance, interest, and depreciation towards your property's qualifying income. But most lenders don't know this, or their institution has rules on top of what Fannie Mae and Freddie Mac allow. You will find that very common with banks. They have rules or overlays on top of what Fannie Mae and Freddie Mac allow. Why? Because they're lending out their own money. They can do what they want. So you just have to make sure you understand that. All right, so adding back things in like depreciation. Oops, let's see, there we go. Mortgage interest, all of that fun stuff. I want you to remember this acronym. You won't really have to if you download our rental income calculator, but either way. Take interest in depreciation. Remember that acronym. Take interest in depreciation. That means you can add back taxes, insurance, interest, depreciation. You can add back other things like HOA fees, one-time occurrences like amortization. Not going to get into the nitty-gritty. You don't have to either because this calculator will do it for you if you input the numbers. So now let's look at this side-by-side comparison. I'm going to pull that document on my other screen so I can see it because I cannot see those numbers on my screen that I'm showing you. Give me 2 seconds. Pulling it. Okay. Now, I've highlighted gross rents. Remember, the bank did gross rents minus total expenses for income or loss. But you are allowed to add back what I highlighted in pink: insurance, interest, taxes, depreciation. On the right side is a screenshot of our part of our rental income calculator. Okay. On that, you will see that we've entered in $212,954. It might be a little bit blurry, but either way, we've put in all of these numbers for you. And it comes out to a gross monthly rental income or net monthly income of $5,104.83. That is offsetting his complete mortgage payment plus adding an additional $5,104.83 to his monthly income alone. Okay? That's not just net income. That's taking out his complete debt of this property whatsoever on his next loan application. Now, you can see it in real time in our debt to income ratio calculator. Remember, I kept highlighting that other monthly rental or monthly income line because it was blank. Now look at it. Now look at his mortgage payments. It was $20,084 or something. Now it's $13,324. Now his other monthly income, we are now adding an additional $5,104.83 to his monthly income. Look what it did to his debt to income ratio. He is now at 30.3%. So we went from 40.8, where he could maybe qualify for a $300,000 purchase, to now being able to add an additional $5,104 to his income. So now that $43,822 that all the banks and most lenders will add to your income turns into $141,886 that you can claim for yearly rental income, which what? I can hear you across the United States yelling at your computer or phone, triples your income on that property while being able to claim all of it to the sweet IRS. Now the borrower can qualify for a purchase and start to cash flow around $70,000 on average. And this isn't even using proposed rental income. Okay. If you see, I've circled, I'm not even using projected gross rental income, guys. This is a $675,000 purchase. That interest rate's way too high. It should be a little lower than that. But you're able to now qualify for that. If he wanted to qualify for higher, he could, because look, his future DTI is only at 39%. And we haven't even begun to use proposed rental income yet. This is how I am able to grow my client's portfolio with ease. This is why I am in these groups as the expert in financing and my team at the mortgage shop. This is how we're able to do it. I'm sharing all the secrets, but what my family has said, well, what if other lenders are watching? What they can watch, you know, I can give away the farm, but it doesn't mean that they're going to know how to operate it or continue to run it. So this is why I want to share it with you, because this could make or break your next deal for the next 2 to 3 years. So the magic trick result, you have successfully reduced your taxable rental income to $43,822 on your tax return with the IRS. Okay. While also showing the rental income from the same property on your loan application as $141,886. To now being able to qualify for a $675,000 purchase that will net around $70,000. Yes, he did net around $70,000, which will increase your annual qualifying income for the next property. So now think about rinse and repeat with this property. I'm going to do the same exact thing I did for this client with his this next property, so on and so forth. And that's how I'm able to help build this generational income for my clients. Now, Karen put in the comments, I'm going to read this one real quick. Is this something you could help us with when we're ready for our second purchase? It's a bit complicated to figure out on our own. Yes, I'm going to send you all the links that you need for us to do it for you. But also, you're getting the rental income calculator, and it sounds complicated, but it literally tells you exactly what to enter, and you're going to get a video from me explaining exactly what to enter and showing you in real time. So you'll have all of that, but we can also do it for you. So what you're seeing right now this is someone who filed a Schedule C versus a Schedule E for their rental income. Go to that. So as you can see, I know you don't know how Schedule C is calculated. So you look at this and you're like, well, yeah, it looks great. Why can't you use what is on this versus Schedule E? The next slide, you're going to see exactly why. They made $259,393. They, put all their expenses in there like you would. You might see things like depreciation, taxes, insurance. You see all of that on here. But the way Schedule C is calculated, you don't get to add any of that back besides depreciation. So now look at this slide. I want to show you what it would have been if they had filed on a Schedule E. Their monthly mortgage payment on this property is insane. It's $12,332. Look at that bottom. You'll see the pink highlighted net, $9,479.25. That is their net income on this property if they follow what I'm teaching you in this rental income calculator, even after the mortgage payment's been taken out. So they're making an additional $9,479 after taking that $12,332 out. That's insane. Now look at the Schedule C. This little rinky-dink Schedule C calculator over here is what we internally use to calculate Schedule C income. There's nothing that we can use. Look at his income, negative $43,334 a month. We can't use it. We can't qualify him. And guess what? The $12,332 mortgage payment still counts against him because you can't take it out of a Schedule C income calculation. You can only do that in a Schedule E. This screen right here should scare the bejesus out of all of you into knowing the difference between making or breaking the next 2 years of your life. And that's why I'm trying to show you why you should file your rental income properties on Schedule E as an echo, or as I say, Schedule E income, versus Schedule C as in Charlie. Though I'm not a CPA, your CPA, if they are well versed in short-term rentals and long-term rentals, will tell you the exact same thing. If they are not, they don't know the specific rules, and they think that you are offering personal services, which means like a bed and breakfast where you have an in-house kitchen, where you have to apply with the county for that kind of stuff to be compliant with whomever. Food and beverage, alcohol, all of that fun stuff. This, I could just stare at this screen, this one screen all day. They would all have offsetted $12,332 in a mortgage payment, which now they can qualify for whatever the hell they wanted to, and still added an additional almost $9,500 to their monthly income. That's somebody's salary all per month, like from a normal job, more so. But their CPA didn't know what they were doing, filed it on a Schedule C, and now they are at a loss of $43,334. This isn't all of their income. This is just for one property. Now we got to look at their other income and all that stuff. Like, this is just one property. This is why it's so important that it will make or break your next 2 to 3 years if you are not working with the right people. This is like a nightmare waiting to happen. So that's why I wanted you guys to see that for yourself. Now, this is our rental income calculator. This is what it's going to look like when you get it. You will be able to enter in your property address, your property's income. If you have multiple properties, you see there's options for multiple properties there. It's not just one. You get a video with it. No, I'm not selling it to you. It's free. I don't care. It's free. Just download it. This is going to help my clients get more properties and build that wealth. Okay. This is going to help you do the same thing if you aren't a client yet. You can go to that link down there. It's just go.mortgage.shop /rental-income-calculator. I'm going to leave that up for you for a second before I go to the next screen of how you guys can contact us. And my admin Ray just put it in the chat as well for you guys. If you want to click that link, you'll be able to copy and paste that link for your download as well. So check the comment section and you'll be able to find it as well. This is how you can contact us to get pre-approved. That is my email, Brenna@mortgageshop.co, not .com, .co. Our generic phone number, if you just want to call and you were just so stinking excited to get this done, 800-816-7982. If you need to schedule a call at a specific time where your dogs aren't barking in the background or your kids aren't screaming, you can go to mortgageshopmlo.com. MLO stands for Mortgage Loan Originator, so mortgageshopmlo.com. If you want in-depth finance coaching, where I think one of you said, are you able to do this for us? Even if you're not ready to purchase yet, this is the option for you. I do this for you. It's finance coaching, our in-depth call. You can go to that website and you will see all of what's offered in that, and you will be able to have that financial roadmap, even if you aren't quite yet ready to purchase yet. And then Instagram, financing.short.term.rentals for any market updates, product updates, guideline updates. I do all those on there as well. And I'm going to put a banner up of, not a banner, join our Financing Short-Term Rentals Facebook group. So that one almost has 4,000 members in it of people just wanting finance information. I'm the one that personally answers all of those. So let me pull that up. Okay. Ray, if you can put in the comments our Financing Short-Term Rentals Facebook link. It's literally, if you look at the top of my screen, that little picture that says Financing Short-Term Rentals, that's the group picture. So you can find it and join that way. So now I'm going to take a sip of water because I'm losing my voice. I'm going to answer your questions. So feel free to drop them in the chat. I already have a few, and I will start answering. So give me 2 seconds. Do I have to have an LLC for just one property? I understand when several are owned, then put an LLC. But as of now, I just want one and put parents in there. The cost of LLC outweighs your income. So I'm not a real estate attorney, but I will say that if you don't have a lot of liquid assets, if you don't have a lot to lose, liquid assets to me are equity in your properties, millions of dollars just sitting in the bank or a stock account or things like that. You don't necessarily need your properties in an LLC. Conventional financing is the best way to go, probably, for the better rates and terms that you can get. You can get less down payment. You can do as little as 10% down. And so if you're starting out, by all means, do the conventional route. Once you start having a lot of equity in properties or a lot of assets that somebody can sue against, that's when you want to start considering an LLC. I'm going to give you an example. If you get hit by a car, fender bender, hurt your neck, whatever, you need to sue them to get the money. They didn't have insurance. You need to get your car fixed. Well, they don't have anything to their name. It was an old Oldsmobile rinky-dink car. They hit you. They don't have insurance. They didn't even have their registration renewed, like nothing. You can't sue them if they don't have money. You can try, but the courts are just going to throw them in jail maybe for like not having money. I don't know. But that's the same example I'm going to give you for your rental properties. Okay. So is this something you could help us with when we're ready for the second purchase? It's a bit complicated to figure out your own. I'm going to highlight again. Yes, we will if you're trying to get pre-approved. If you're not trying to get pre-approved quite yet, I'm going to put in the link right here. Where did my StreamYard go? Give me a second. If you're not ready to get pre-approved yet for a specific property, or you're not ready to buy in the next 90 days, you can go here. There is an option that you work directly with me where I do this all for you outside of needing to get a loan right away. So you can go just to brennacarls.com/finance coaching for that. Okay. Now, please show us how to present the right way to compute projected gross rental income on the new proposed property I'm applying for a loan on. Okay, so Chuck's talking about our debt to income ratio calculator has an option in there for proposed rental income. Every single property is going to be different. I don't know what that property is going to make. I have no clue what property you're looking at. What I suggest is literally putting in enough to offset the monthly mortgage payment. So the monthly mortgage payment, total is $3,000. Then put in $36,000 annually, and that's how you can gauge it. Or you don't even actually have to look at that. If you look at your current debt to income ratio, whatever that is, if you offset that mortgage payment, your proposed debt to income ratio is going to be the same thing. So just keep that in mind. Tanya Harding put a little emoji when I was showing Schedule C versus Schedule E, and that's exactly how I feel. Chuck, you had mentioned that you need the rental income calculator, or you trying to download the DTI calculator. You can email me and we'll send that to you as well. Can you still claim material participation to offset W-2 income if you file on Schedule E? Yes, that's exactly where you're supposed to do it at. You're supposed to do it on schedule. You're supposed to do material participation, cost segregation on Schedule E. You can get the most bang for your buck on that. And that's where you're going to see that is on the Schedule E. Can you get a conventional loan for a foreign national who has an ITIN, rental income, and file tax returns to the IRS every year? You cannot get a conventional loan for foreign national. I believe you can get one if you are a permanent resident alien. So we can do that for you. But if you're a foreign national living in another country, we would most likely have to do DSCR. And then you would need to talk to your CPA about the tax benefits for foreign nationals when filing and doing cost segregation, all that fun stuff. Great presentation. I'm internally in the DTI trap. I knew some of this, but not all. Thank you. You may not be. Download that rental income calculator and hopefully it will work for you. What are some of the benefits of the 100% bonus depreciation for this versus the standard depreciation over the 27.5 years? So you're confusing the amount of time that you're able to do it versus the amount that you're able to. Again, I'm not a CPA, but how much is it now? Is it going down to 40%, or has it gone down to 40%, or will if they don't pass the new bill to bring back 100? That means you're able to claim 100% of that depreciation as opposed to whatever that number shows. Let's say it shows 38,000 as opposed to 40% of it. That's why so many people are holding off and filing extensions in hopes that President Trump will pass that 100% bonus depreciation bill again. And you are welcome. Okay, I don't see any other questions. So if somebody wants to put in any questions that you have, feel free. Actually, was better in time than I thought I would be because it was a lot of information to go over. But yeah, I will hold on for just a second for any other questions. Again, I'm going to put this up here. If you have any questions, feel free to email me, Brenda@mortgageshop.co, not .com. Call us at 800-816-7982. Schedule at mortgageshopmlo.com if you need a specific time. If you want in-depth finance coaching, which means not just getting pre-approved for a loan, but maybe you're not ready to purchase, or maybe you need to look at good debt versus bad debt like I presented last week. If you need help with all of this with your properties, you can go to brendacarls.com/finance coaching, and I do have an in-depth finance coaching option for you there. And then that's just our Instagram handle if you want to follow us on there. Just noticed the CPA had the depreciation put on Form 4562 of my business tax filing. Can that be added back for DTI calculation? This is getting in the weeds, but this is what most lenders don't know as well. Yes, it is able to. If that property is in your personal name, we literally do the Schedule E income calculation like we would a Schedule E for your business tax return. If it's not, and it's in your LLC, we're still going to calculate your business income, but guess what? We're still able to add back that depreciation no matter what. A good lender will know that you're able to do that. Again, banks, I even have to coach underwriters sometimes. I say, hey, you forgot to add back in the depreciation. Like, it is just not well known, guys. It's just it. Like, not many people know how to do it. But the answer is, Frederick, yes, you're supposed to. All of you guys, this is recorded. The replay will be added, and I will put in the replay links for you in the comments. Was that a conventional? Let's see. I missed the beginning. Is that a conventional loan where you were adding back DTI numbers, or is that a DSCR type loan? The DTI would only be conventional because, again, DSCR doesn't go off your personal income or debt. So it doesn't look at DTI, debt to income ratio, at all. So anytime I'm talking about debt to income ratio and when it's being factored is when I'm talking about a conventional loan. Came in late. Is it recorded? Yes. I will post the replay links in the comments, or you can just simply go to our YouTube channel since you're on YouTube and just replay it from the beginning. I have 2 properties held in partnerships LLC. Can I use them towards my DTI? So you mean, can you use them towards your income and things like that? Yes. If you want, we can calculate it for you. Self-employed income, it's the same like I told you. So if you own it in your personal name, we calculate it just like a Schedule E rental income. If it's in an LLC only, we still use it. We just don't have to offset any mortgage payment, essentially. We're just able to calculate it like a normal self-employed business income while adding back that depreciation. All right, guys, if there are no more questions, I'm going to let you go. Thank you so much for joining me. This is a lot of information in a very little time. So play, pause, repeat, go back. Email me if you have any questions, and I will talk to you soon. Bye, guys.